George Magnus is a senior economic advisor for UBS Investment Bank, joins me in the studio now. Lovely to have you with us, George.
Morning.
So is Greece going to exit the euro?
Well, obviously there's a growing conviction in a lot of circles, including obviously official circles, that this is a real possibility now. Of course, there's no script for this, but I think that the one thing that I think is pretty much inevitable now, and it's probably the only certainty that we really do have, is that Greece is hurtling towards a default, a formal default, most likely after the elections on the 17th of June. But of course, given what's happening in the banking sector in Greece and the kind of vulnerability of banks in other countries, it's also possible that this could be hastened in ways that would take us really by surprise, actually. But I think the issue of Greece's, leaving the euro system, I mean, it doesn't necessarily follow that a default has to be accompanied by an exit from the system, although, of course, the circumstances under which this happens are giving a lot of people cause to believe that it's increasingly likely.
So do you then make a distinction between Greece leaving the euro voluntarily and Greece being forced out, and would that have an impact on, say, how disruptive something like that could be?
Most definitely. I mean, it's possible. I'm not saying this is likely, but it's possible that a new Greek government, when it is formed, might be able to get, if it says basically, we can't meet the terms of the Troika austerity program, we're not going to do it, we don't have a mandate. I mean, it's possible that they could go to their European partners and basically get a reluctant blessing to kind of leave the euro system with support for the Greek banking system, and in this kind of rosy scenario, not that rosy, but scenario, this is kind of what we might think about as an orderly exit from the euro system, which would have to be accompanied by huge changes in the way in which the ECB and European leaders think about what they have to do for the remaining members of the structure of the system. But of course the danger is that for one reason or another somebody miscalculates. The ECB cuts off its funding lifeline to more Greek banks, because they've already done it to 4 banks allegedly this week. And then the whole thing will kind of break up in acrimony and chaos, and that's really spooky. I mean, a dangerous scenario.
We look at what's happening in markets this morning. Assets, growth assets, anything linked to growth is really feeling the heat today, and that's mainly linked to these events right here in Europe. But I suppose the big concern is not just Greece, but what it could mean for the larger Eurozone countries. So could Contagion be stopped in this scenario?
Well, of course, this is the key issue. I mean, it's possible, of course, that that the collapse of the Greek banking system in and of itself is a big problem, which would need a lot of ECB support to stop or reverse. But of course, the bank runs, which have started already in Greece, and we've seen these, of course, in Spain as well, but maybe more related to local issues to do with Bankia and so on. But of course, the spread of bank runs and capital flight from the Eurozone, from other Eurozone countries, of course, would be really serious development, and would force at least 2 major technical problems. One is for the Bundesbank, which is basically effectively financing capital flight within the Eurozone. Would they be prepared to buy or to lend any amount of money to other Eurozone central banks? And of course, ultimately for the ECB, because there may well come a point at which the ECB says, we cannot and will not fund, Greek banks or, weak banks in the rest of the Eurozone any further, because of collateral risk and recapitalization risk. The ECB only has about 6 billion euros of capital.
And I mean, they've already said that they'll temporarily stop lending to Greek banks because of that risk. So what does that tell us about how they might respond in this situation?
Well, that's the question. They did say, of course, the 4 banks, Greek banks, to whom they stopped what shall I say, just kind of ceased their normal lending facilities. They did say it was because they hadn't yet recapitalized with the monies that had already been provided as part of the package for this purpose, and that they would become eligible again once they were recapitalized. But of course, this just talks to the whole problem of implementation and political agreement in reaching kind of solutions within the Greek political system. And I think the ECB, I mean, it's a game of chicken. I mean, and it's just the risk of miscalculation is actually the main risk. It's not that anybody has an agenda to do anything.
No, I'm just wondering, this game of chicken, if and when it comes to crunch time and we have a euro exit situation and you say, or the ECB or Germany, someone has to step in and backstop these banks, what is the risk of it being too late then? What is the risk of it affecting other peripheral banks and just accelerating capital flights, and then there's nothing they can do?
Right. Well, I think the risk is already here, and it may be not, the sort of the be-all and end-all of breaking news at the moment, but actually the danger is that actually as we get closer and closer to the Greek election, and if it looks like either it's going to be inconclusive or that the rhetoric has kind of ramped up about we will not take this austerity any longer and so on. The risk obviously is that people will begin to lose confidence, and then it might become quite difficult to contain it. So obviously huge focus really on the ECB and what ECB Governing Council members say about really their attitude towards collateral and how low will they go in terms of collateral risk, I think is a huge issue.
But what do you expect to hear from the G8 this weekend towards German Chancellor Angela Merkel?
Nothing really. I mean, obviously the global economy and Europe obviously will figure very prominently, but there are a lot of other kind of political issues which will be on the G8 agenda, and I think it's being followed by a big sort of NATO conference in Chicago. So a lot of this I think will be behind closed doors. It's quite possible that Angela Merkel will be on the kind of receiving end of a few lectures, or not necessarily lectures, but pleas really for we've really got to solve this and we've got to solve it properly soon, and there may be the changing tone of the agenda about growth austerity. But
well, that's what I was going to ask you. I mean, obviously François Hollande very much put that back on the agenda. And that's what they've spoken about in the last couple of meetings. But now that we're seeing market tensions rising again, is it going to turn to more rhetoric about fiscal integration, no matter how much the Germans want to avoid it?
Well, it has to, actually. I mean, if the crisis over Greece is not to escalate into absolute anarchy in Europe, theoretically it should. The price of avoiding that has to be much faster and progress towards integration and the building of new momentum that actually not just citizens but financial markets can believe in things like debt mutualization, e-bonds, banking integration, common deposit insurance scheme, common banking regulations. These kinds of things are absolutely essential for this crisis to be contained. Now, if your question was, are they talking about these things? The answer is, I'm sure that some people are talking about them, but this isn't the agenda at the moment, and it needs to be.
If they don't put that on the agenda fast, do they risk a permanent loss of confidence in the monetary union?
They risk much more than that. I mean, if these things cannot be enacted and implemented fairly quickly, or at least belief given that there is a clearly thought out roadmap along which they're trying to kind of pursue these policies, then I think, I honestly mean it, I think that chaos in the euro system and breakdown, we've no idea where this is going to go, but it's very, very likely to happen.
We have no idea where it's going to go, but many economists saying that this was the year they had to make a decision between strengthening the union or seeing it completely disappear. How close are we to that?
No, we're here.
Point?
We're here. We are at that point, and I think because if Greece does default, well, I say Greece, when Greece defaults, and if it is either feels it is forced or it chooses to leave the euro system, then that will be the moment when Europe has to decide, we're going to link arms and create a stronger, political union straight away, or make steps towards that, or if that doesn't happen, then I fear. Really, it's a binary outcome. You either do that or you go backwards very, very, very quickly.
Can China or the Fed rise to the rescue again?
Well, of course, it's kind of an interesting question because obviously both of them have strong vested interests in the avoidance of anarchy and sort of economic chaos in Europe for all obvious reasons. So I'm sure there will be, lots of kind of warm words and exhortation, and we stand by the European, project, and there might even be, money provided, maybe not directly, but obviously through IMF channels and so on to try to, strengthen the firewalls and so on. But actually, I'm not sure that I'm not sure that the United States or China ultimately can save Europe from itself. It's really Europe has to make political decisions about strengthening its own fabric and institutions, and the others can't really do that.
Well, Mr. George Magnus, Senior Economic Advisor at UBS Investment Bank, thanks for your time. Really
Thank
good
you.
to talk to you.